G'day ladies and gentlemen, and welcome back to another video here today. I don't have a webcam today. I'm currently getting a new desk, and so I'm literally recording this video on the kitchen table. So it's not really suited the background and everything like that, and I can't really be bothered getting the green screen set up just for one video, but I'll be back tomorrow with webcam most likely. Maybe the day after that when I get the new desk. Regardless of all of this, CPI has just been released, guys, and we've seen the CPI rate actually come in at 5%. The consensus was 5.2%, so this is actually lower than what the market expected, 0.2% lower than what the market expected. Extremely low inflation rate. Right, if you're looking at what happened last month, we had a 6% actual inflation rate. We've now got a 5% actual inflation rate. That is a 1%, an entire percent of inflation down. So inflation is heading downwards very, very rapidly, which is incredibly bullish, to be honest with you. It's very good for the markets, because I'm going to look at it in a second, but I'll look at Bitcoin first. But we've seen the S&P historically react very badly to high inflation, react very well to low inflation. So this inflation rate will, generally speaking, obviously when you see periods of hyperinflation, which we haven't really seen, but for example, during COVID, where we printed a shit ton of money that was all pumped into markets, that's obviously good for the markets, but that's not necessarily the same thing as inflation itself. But regardless of that, it is surprising to note that during this period of time where we've seen inflation much lower than expected, 0.2% lower than expected, the general consensus, the market consensus on interest rates has actually shifted a bit more bearish. We were expecting, or the market was expecting just a week ago, for no more rate hikes. Now we're actually expecting a 67% probability to see one more rate hike. But overall, this doesn't really have a massive impact on my views on Bitcoin or anything like that. But it is interesting to note that the Federal Reserve seems pretty decisive on having one more rate hike. Even with this new inflation data coming in, the market's expectations hasn't changed there. So that's interesting to note. I do want to quickly look at Bitcoin. I'm going to keep this video quick just because of the circumstances of making this video. Although every time I say that, we end up making a long video. But essentially, Bitcoin, same as yesterday to a certain extent. Obviously, it's moved up a little bit more. You know, we've seen a break above 28.6K. That's obviously a massive, massive deal, as 28.6K, that red line there on the weekly chart, is the strongest resistance zone we have seen on Bitcoin since back here in 2019, 2018 at 6K. So very, very strong level. The reason why I'm not going to discuss it too much, I did discuss it a lot yesterday, is because we haven't broken it yet, right? We haven't seen a weekly candle close yet. We've seen a daily candle. We've seen two daily candle closes actually above it. We haven't seen a weekly yet. And given the magnitude of that resistance level at 28.6K, I'm not willing to sit here and claim that it's broken without actually seeing the weekly candle close, which is where it's constituted on. It's constituted on the weekly chart. So obviously you need to see a weekly candle close. I don't think a daily candle close is quite enough. But you know, we did cover extensively. We have covered extensively in the past that we're copying exactly what we did in 2018. We had this rounded bottom just like 2018. We then saw this period here where I'm circling in 2019, where we had multiple doji candles on the weekly chart, just like what we saw in the last few weeks. And then in 2019, we also obviously broke that level, right? That critical bull market foundation level at 6K, which is similar to the one at 28.6K. And after that, we saw a second half of the move and we skyrocketed. So we can expect to a certain extent, okay? It's not like we can expect it because there's only one data point. But to a certain extent, we can expect to see, if Bitcoin closes a weekly candle above this level, a big pump, okay? A pump that lasts a decent amount of time, that takes us to the next major resistance level. And that next major resistance level is basically around the 36 to 38K level. I would expect personally, if Bitcoin closes the weekly candle above 28.6K, a continued pump in the coming months to that 36 to 38K level. From there, okay, obviously this is looking a bit too far in the future and it's subject to change, but from there at this point in time, I would expect some sort of long-term sideways / downwards correction until possibly the end of the year, Q4 this year, and then gradually start to lift up again and especially start to kick off as we see the halving, just like what we saw over in May 2020, and that's when you see the bull market. So if we're, you know, copying that onto this chart, it could look something like this and we'll see the bull market there. That is generally speaking, I mean, according to the cyclical theory, and the cyclical theory has been nothing but valid at this point in time, that is what we would expect. So all eyes really do rest on the weekly candle. Obviously, if we don't get the weekly candle close above 28.6K, that's actually quite bearish. It wouldn't necessarily invalidate the fact, well, the theory at least that I have, that the bottom is in. Because obviously we can't just say, oh, the bottom's not in anymore if we don't, we have to break below certain levels in order to start saying that. The major support level I'm looking at for bullish invalidation, which is when I would start to consider the bearish argument relevant again, would be 25.2k. If we lose 25.2k, what we're doing essentially is we're breaking back below, and actually let me make this line green so you can see it here. We're breaking back below, and we're re-entering, okay, this entire range we saw here from June 2022. That would be very bearish. Until we get a break below 25.2k, I am in no position at all. I don't think anyone is in any real position to actually be bearish on this market. I think this is an extremely bullish market on a medium to long-term scale. And I think that if you're bearish above 25.2k on a macro scale and you're calling for new lows, you're simply not looking at the charts. That is my opinion. Obviously, it's not an objective fact. But I very, very strongly believe in that opinion. And a lot of people tell me, oh, Wolf, you're too bullish, you're being biased. I actually have an invalidation point. So I have my opinion. I have an invalidation point here at 25.2k. If we lose that, it's not going to look very good anymore. And I don't see that as biased at all. I see that as having an opinion with a clear invalidation. And that's what I do all the time. That's what I did when I was bearish here for 13 months from November 2021 at 63k. That's when I said the top was in. And that's exactly what I started doing here at 16k when I said the bottom was in. So it's good to have invalidations. If you're going to have an opinion, you need to have an invalidation. And 25.2k is that invalidation zone. But that's a long way away. We don't really need to worry about that at this point in time. As I said, the main thing we need to be watching is the weekly candle at 28.6k. I think that most people are aware of that by now. I've been talking about 28.6k as the bullish breakout zone on a macro scale since literally the week we lost it back here in June 2022. I've been talking about this level for close to a year, guys. So, it's very, very critical level, and it's been obvious to me that it's critical for a long period of time. Now, I do want to jump into the S&P 500 and the traditional markets, but I'll do that in just a second. I do want to first kind of run up on this point here with the follow up on this point with 28.6k by bringing up the total cryptocurrency market cap. It is important to note that 28.6k on the Bitcoin chart and that resistance level is validated by the resistance block at this red block here between 1.2 trillion and 1.15 trillion on the total cryptocurrency market cap. As you can see, we're just peaking over that level, just like we're doing on Bitcoin with 28.6k. So this level at 28.6 is validated by the total cryptocurrency market cap, and that makes the weekly candle close even more important. One more thing I want to look at before we get into traditional markets is Bitcoin dominance. We're seeing a breakout of this long term, and I mean long term, this is a 2-year long, okay, horizontal, slightly downtrending channel formation on the Bitcoin dominance chart. Basically, what this chart represents in a percentage form is the strength of Bitcoin in comparison to altcoins in the cryptocurrency market. So what we see right now is the number being at 48%. That means that 48% of the total capital in cryptocurrencies in Bitcoin, and the other 52%, the remaining 52%, is actually in altcoins, which is including Ethereum. So any other coin that isn't Bitcoin. Now, this has been trending upwards massively ever since we saw the bottom in late November. And what this indicates is that we've entered the phase in the market where Bitcoin is in control. Bitcoin is dominating the market. That's exactly what we saw back here in 2018, 2019 after the Bitcoin bottom in that cycle. We're seeing the same thing here on a much smaller scale, but it is still uptrending. The reason why the scale is smaller, as you can see, we moved upwards very quickly here. We're moving up quite slowly here. The reason why the scale is smaller is because there's simply a lot more altcoins right now than there was there. So there's more money spread out in more places. So obviously it's harder for Bitcoin to take dominance, but generally speaking, the fact that we're moving upwards here at the same time what we did in the last cycle is indicative of the fact that everything is on track and the cycle is looking perfectly healthy. Again, I say it all the time, I'll say it again. At this point in time, every single piece of data we're going to look at literally indicates to a perfect extent that the 4-year cycle theory and the logic that surrounds it and the trend that surrounds it is perfectly valid. So for me to so for people to sit here and say at this point, while we're up this high without breaking down below any critical levels and say the bottom isn't in, to me personally, it's ridiculous. Okay, now traditional markets, and obviously this is a big basis of the bearish argument. Now I'm not saying that they're going to go up, okay, but what I am saying is this. Okay, the S&P 500 has been bottomed out for close to 6 months. It bottomed out in October. We've been going upwards for close to 6 months on the S&P 500. Again, I'm not saying it's going to go up, but I'm still going to make the points here. I also want you to draw your attention to this orange line here. This orange line right here is basically the, what is this, inflation? Or it's actually inflation. So I'll draw your attention to this blue line instead. Sorry. This is the interest rates in the United States of America in comparison to the S&P 500. The pink lines on the screen are the historical major macro S&P 500 bottoms we've seen. What you will notice is that every single time the S&P 500 bottoms out, historically speaking, we have seen interest rates decreasing. Now, interest rates are topping out in the next rate hike cycle in just about a month. From that point, we will see interest rates maintain at that level for about 3 or 4 months, and by the end of the year, we will be seeing rate decreases. So unless the S&P 500 starts dropping like now and very quickly, it is actually unlikely that the S&P 500 will see new lows according to this trend. So S&P 500 has been bottomed out for 6 months, okay? According to the historical data, it generally bottoms out when rates are going down. Rates are going to start going down quite soon. So the S&P 500, if it's going to go down, now's the time to do it. And it's a little bit confusing as to why it's not moving downwards so fast. Perhaps maybe it will react differently this time. After all, this is the first time we have ever seen the Federal Reserve raise rates while the market is going down. If you look at this chart for a second, what you'll notice is that the S&P 500 has never gone down while the Federal Reserve have been raising rates. This is the first time it's happened. So perhaps this unique circumstance might lead to a different circumstance in relation to the bottom. Who knows? What I'll also look at is inflation. And this is orange line here is inflation. And again, the S&P 500 chart is in the background. What you'll notice is that generally speaking, the S&P 500 bottoms out when inflation is topped or going down. And of course, generally, not always, generally, okay? And of course, inflation is now going down as well, which makes it more likely the S&P 500 will bottom out shortly or is bottomed out. So the whole traditional market argument is interesting to me because I think a lot of it is very speculative, and I don't think a lot of it takes into account that this is the first time we've seen QT while the S&P is dropping. Now, I'm not saying at all that the S&P 500 is going to go up or anything like that. I don't know what it's going to do. But I'm just saying it's not as clear cut as some of the perma bears will have you believe. That's what I'm saying. DXY. Now, what we do know is this, okay? S&P 500 is very commonly known to be correlated to Bitcoin. Now, what we do know is this, that correlation has been downtrending massively over the last 6 months. The correlation coefficient of the S&P 500 on a long-term basis is generally averages around 0.7%, which means every move Bitcoin makes, the S&P is making around 70% of the same move. If you want to really generalize it, that's what it means. Currently, that correlation coefficient is down at 0.3%, which means that correlation has more than halved, which means Bitcoin is much more independent than it once was. So there's no guarantee at all that the S&P going down will drag Bitcoin down massively. That's what I wanted to say as well. I also wanted to say that Bitcoin, yes, it is correlated to the S&P 500 generally, although right now that correlation is very weak, but it's also reverse correlated to the DXY. And the DXY has just broken below this critical pink level, okay, while in this massive ascending channel formation that it's likely to break down as well. And of course, when the DXY goes down, Bitcoin goes up. We've seen that historically on many, many occasions. For example, over here in 2017, this was the Bitcoin bull market. Look what the DXY did. This was the bear market. Look what the DXY did. It went up. This was the bull market. DXY went down. This was the bear market we just saw. DXY went up. So every time this thing goes down, Bitcoin goes up. So I'm just saying it's a lot more complicated than the perma bears will have you believe. It's really not as simple as, oh yeah, S&P 500 and NASDAQ are bearish, therefore Bitcoin is. It's not that simple, especially when you're taking into account the cyclical theory. So I wanted to mention all of that, and I think that was relevant to mention given what's just happened today with this lower inflation rate. But ultimately, that's the video, guys. I've got a lot of content in yesterday's video, but it's very much important, very much worth watching. If you haven't watched that video, all the information is still relevant. So go watch that video right now. It's very important. But other than that, guys, I'll end the video there. I've got the VIP sale currently, 48 hours left on the 25% discount on the VIP group. So on Telegram, we trade altcoins sub-daily. If you're interested in that, the VIP sale's got 48 hours left, and you can check out the description below for more information. We've also got BitGet Exchange. If you need an exchange, a place to trade, right, this is the place to do it on BitGet. So basically 5 times lower fees than Binance, optional KYC. They've released their reserves information. They've got a protection fund. Everything you need in exchange is on this exchange. I highly recommend getting around and doing that. They've also added a bunch of new coins recently to derivatives. So go ahead and check that out using my referral link to get a 15% discount on trading fees for life. And finally, guys, if you want to learn how to trade, Become a Trader 10-unit course is the place to do it. This is a course developed by myself and Megaworld Crypto. We made this course last year, and so far it's been very good. We've got about 100 students, 95 students at the start of April, about 100 students now. Go ahead and check out all the information on the website, which is in the description below, and throw us an email if you're interested. So guys, thank you for watching. Hope you enjoyed the video, and I'll catch you back here tomorrow.